Hello, everybody, and welcome to the Trading with Ashley show, coming at you from the Tesla studio today. I am wearing red for a very specific reason. I woke up today and I looked at the market and it was red, a sea of red. Now, we have been expecting red. We have been cashing up in my community so that we could take advantage of it, and I actually love red days. I make so much money in premium on red days, and today was no exception. I am going to take you through some trades that I did live today. I was able to secure over $20,000 in premium just this morning. Now, it took a lot of capital to make that premium. I am using a combination of cash and margin in my account to sell some puts today. But I don't want that to intimidate you, because you can take the same concept and you can shrink it down to the number of contracts that you can afford, or you can go with smaller ticker symbols. That works really well too. I even did some credit spreads for my smaller account traders, and that was very helpful. By the way, speaking of credit spreads, I am going to start a credit spread challenge in my brand new trader network. If you're interested in that challenge, we are not going to go in heavy. We are going to do one trade a week so that you can get used to this, and I'm going to teach all of you how to properly trade credit spreads. There is a direct link below if you want to be a part of that challenge. This is my Discord community for newer traders that have smaller accounts. If you want the larger Discord, that's no problem. Feel free to click the link below so that you can book a call and take a look at the community. But if you're just interested in starting small and slow, the New Trader Network may be perfect for you. Now, this upcoming Thursday, I am going to be doing the training with that entire community so that they're ready for the credit spread challenge. If you want to be a part of that, then join us. For the rest of you, let me take you through these trades we did today. Now, they all have a common theme, and I wanted to explain that to you. They're all great companies, quality companies that are very profitable. They're just having a red day. Now, I used a combination of fundamentals and technical analysis to determine my entry point. Now, on these sold puts, you will notice I went out to December, and that was done specifically for a few reasons. One, if I'm going out to December, I am able to leapfrog over some vulnerable months in trading. And I am getting paid for that. By going over a few months in these trades, then I get more premium because I'm going further out in time for these sold puts. The other thing that it is doing for me, it is insulating me a bit against early assignment. So if my strike price actually gets breached, there's less of a chance of early assignment. But the strike prices that I selected on these stocks, I would not mind actually being early assigned, because if I'm early assigned, then that means I get to enjoy the ride up with these stocks that more than likely will take place in the fall. So I'm going to show you exactly what I did. You'll see all of the trades, and I did call all of these trades in my community, so they were able to take advantage of them as well. If we have further pullbacks, I might do some of the same trades, or I might look at different ticker symbols. I would love for you to come join us and be a part of all the fun on the inside. Let's jump into the computer and I'm going to show you what I found. All right, so we're having a little bit of a red day, which was expected. Obviously, it's September, and I am looking right here at NVDA. It's jumped outside of its Bollinger Bands. I think it's a good opportunity to go ahead and look at selling a put. Now, it looks like the 50-day moving average is also very important. It's right there at 170. So this is a really good spot of support. But I'm going to go a little bit further out to take advantage of this elevated IV right now. I do notice we are 40 on the RSI, and typically that could get, down pretty low. It could go as far as 30. So I'm going to go a little bit further out to protect myself a little bit more and then also get more premium. So let's go take a look at selling a put on NVIDIA right now. Now, when it comes to the expiration date, I'm going to leapfrog over these vulnerable months. I'm going to go to December the 19th, and I am going to select that 165 strike. Now, if this bounces in the coming days, then we will be able to get out of this pretty quickly. If not, I'll be willing to take assignment at the 165. So I do sell to open, and I'm really confident in NVIDIA, so I'm going to go ahead and do 5 of these contracts, and look, they're paying $11.30 a share. So this is really good as far as the amount that I'm getting, because you have to consider that if I take assignment at 165, but I'm being paid over $10, then that really reduces a cost basis down closer to 155. So I like this trade. I am going to be receiving $5,625. This is the max loss, but keep in mind, this is only the max loss if NVDA goes to zero. I'm not worried about that. So I'll preview this order and I'll place it. All right, this filled, so this is really good. 165, 5 contracts of NVIDIA, the sold put. Let's take a look at Amazon. This is another real strong one. We're having a good red day. We're down about 1.86% right now. And I like where we're sitting in the Bollinger Bands. We're right here in the middle. And when that happens and we are under 50 on the RSI, I like to shoot down here for the bottom of the band. So we're looking at around the 215 mark. If I want it to be even safer, I could go down even further. You see this 200-day moving average? It's right there sitting at about 212. So I could go to 210 if I want it, and that would be even stronger support. I might do a couple of these. Let's go take a look. Again, I'm going to go out to December the 19th. I'm going to leapfrog these challenging months just to be safe. I'm going to start with the 215 trade, and I'm going to sell a put. I do sell to open. Now, I'm only going to do 2 of these because I'm going to do 3 more and go a little bit lower. So I'm going to get $1,800 for this trade. Again, the max loss is only if Amazon goes to zero. And great, that one filled. That's another $1,800 in premium that I received today. For this trade, I'm going to go a little bit lower. I'm going to do the 210, and it's paying $760, but I will be getting Amazon lower at this point. Flesh out my position, and I'm going to do 3 of these because if I am assigned on all of these, this will lower my average. This is how I like to trade. I like to stagger my strike prices down. And it looks like for this, I'm going to be getting $2,265. Again, max loss is only if it goes to zero. Not worried about that with Amazon. Okay, perfect. This one filled the 210 at $767. Let's take a look at Google. It's down 2% today, but that's expected because it was trading very high at the top of its Bollinger Band. We were expecting a pullback. This one is 63 on the RSI, so there could be some more downward pressure. But I think at this point with Google, anything around that $200 mark should be a very fair entry looking at the trajectory for Google. So I'm going to look for potential options at around that $200 level, again, going out to December. This trade is paying $9.40 a share, so that's $940 to get Google at a cheaper price than it is trading at today. Now, because there could be more downward pressure on this one, I'm only going to do a couple of contracts on this one. That's going to be a nice little boost in my premium collection for the day. Looks like I will be receiving about $1,800. Again, max loss is only if Google goes to zero. Perfect. It filled at $9.53 for a couple of contracts. Let's add a little earnings excitement into the mix. We do have earnings this week on Lulu. Let's look at where it's trading on the charts. It continues to suffer. It's trading below the 200-day moving average. So I wouldn't want to do a lot of contracts, but it is super low. If you just scan out here, I mean, this is the lowest it has been in several trading sessions. Wow. And it's almost oversold on the RSI. So if they have any bit of good news for earnings, it should pop. But even if it does not, this put I'm about to sell, if I were to pick it up at the price I'm going to give you, it would be, to me, a fair value. So I'm going to go ahead and look on the chain and see what I can find. I really like this trade. So Lulu is trading right now at $196 a share. I am agreeing to buy it at $165, which is $30 lower than it's trading right now. But look what I'm going to get for putting up the money to buy it at a steep discount. I'm going to receive $910 for this trade or something around there. So that insulates me a little bit further. Even if I put the shares at 165, 155, 160 would probably be the area where I would start to feel like I'm losing a little bit of money, but then I'll just wait for recovery. So I really, really like this trade. I'm not going to do a lot of them, but I definitely want some skin in the game for these earnings. Here's the setup. I'll be receiving $1,800 max loss if Lulu goes to zero. That one was filled right there at about $9. Not a bad trade at all. To round out the day, I'm going to look at one more trade. This is for ticker symbol ABGO Broadcom. Now, just to show you, if you're not familiar with this company, When I go to the analysis tab, they are expected to beat earnings. You can see that right here. And they are a very profitable company. The blue bars represent the revenue and the yellow is the earnings. So they're looking really good. Their price target is 305 and they're just trading down right now, which is always good going into earnings trading down. So let's look at where they are on the chart. You can see it's right here at the bottom of the Bollinger Band and it's actually sitting on top of the 50-day moving average. The RSI is 49, so there could be more downward pressure depending on how earnings go. But I really am drawn to this 253 mark right here. This is the 100-day moving average, which does serve as support. The higher you go up with the moving averages, it offers more support the more days that are taken into the equation. So as you can see here, anything around that 225 mark is really strong because that's the 200-day moving average. So keeping this in mind, let me go look for a potential trade setup. I'm probably going to shoot for somewhere in between the 100-day and the 200-day moving average, probably going out to December. It looks like it's paying a little bit over $800 per contract. I really like picking it up at this price at $240 if I'm able. I decided to go with the $240, which is a significant discount from where we are right now on a very profitable company. So I love this trade setup. This is going to offer me $2,400 in premium. Again, max loss is only if AVGO Broadcom goes to 0. And we got a really good fill, a little bit over $800. We got $823 per contract for a total of an additional $2,466. The deals just keep coming today. It's hard to stop trading with so many great deals. Let's look at Robinhood. It's trading under $100 right now. They do have earnings coming up in October, but I'm going to go much further out. Let's look at the chart and see what we have here. We're at a really good spot. We are under 50 on the RSI, and we're already trading at the bottom of this Bollinger Band. We're trading under the 50-day moving average. So a level of support after that might be right here, the yellow bar, the 100-day moving average. And I think people are starting to wake up to all the opportunity with Robinhood. So this is one that looks like it has some strength here and it's starting to get bought as we hit these lower levels. So I'd be happy to pick up this stock anywhere between $80 right here and probably $90. Let's go look at what we can find in premium. I decided to go with the $85 strike. That's $15 lower than we're trading at right now, and it's paying over $600 a share. I'm going out to December, and I'd be very happy to own more Robinhood at this strike price. I definitely think that this is a quality company, and all the things that they have on the horizon, this will be a nice complement to the shares I already own, coupled with some leaps that I purchased. The premium I'm going to receive for these 5 contracts, $3,325, max loss, $39,000 if this goes to 0. At this point, we are at $19,256 in premium this morning. Now, I do have to take a short break. I have to go welcome all of my members at Ashley Live in my community. I'll be back and I'll try to get us just a little bit more money so that we can cross over that $20,000 threshold on Tuesday. Currently sitting at a total of $19,256 in premium today. I have to take a short break. I'm going to welcome my members in my community that just joined. I'll be doing that on Ashley Live. Then I'll come back and I will try to round out our day so that we can make over $20,000 in premium. I'm going to switch things up a bit. I'm looking at XLE. This is an energy fund. And with everything we have going with energy and all the energy that's going to be required for the AI dynamics and everything that's taking place, I think this is a really good trade. And I am going to use the 200-day moving average right here as support. And so that'll be anything around $87. Let me go put together a trade and see if we can't get more premium to get us over that $20,000 mark with a quality fund. I decided to go with the 86 strike. 85 is a more natural strike, but there's no volume on that particular chain. So I'm going to go with 86 because there was 2,000 volume on that chain. So I think that's going to be an easier fill. The bid-ask spread is decent. And so I'm going to do 5 of these contracts and I'm going to preview the order. And that one was filled 5 contracts at $229. So we reached our goal. Let's calculate all of the premium that we made today. There we are. We did it. $20,401 in premium today. Remember, if here with me, trading with Ashley, there is no trader left behind. Now, I've been hearing from a lot of my community members, they want leaps call options. There is a perfect time to buy leaps call options if you are in the market. I did a video all about it. I am going to leave that video for you right here.